In this video, Morgan Stanley cut their Tesla stock price target in new research note, some juicy new details about Tesla's massive expansion in China, and the Biden administration's electric vehicle corruption gets derailed. First, a quick look at Tesla stock today, down almost 0.5%, closing a little over $700 per share. I've said it a trillion times, I'm going to say it for the 1,000,001st time. I still think Tesla stock today is the best risk-adjusted opportunity in the stock market, at least that I'm aware of. Of course, I could be wrong. I mean, anything's possible. The Nasdaq 100 today slightly down. Apple stock today down about 1/3%. Alphabet stock down just over $1. Amazon stock up 1/4%. Rivian stock down almost 2%. And Lucid up about 0.75%. Very, very tame and timid day in the stock market today. How boring. The good news is, I'm sure it won't be too long until we get back to our extremely volatile best. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. Let's take a quick look at the latest research note from Morgan Stanley, an update to their Tesla stock price target. Quote, trimming 2Q estimates, price target for Tesla stock to $1,200 per share, reiterate overweight rating. We mark to market our 2Q forecast for lower volume from the latest data coming out of China, with most of the shortfall made up for in second half of 2022 volumes and higher pricing. Price target falls to $1,200 per share for Tesla stock. Previously, it was $1,300 per share, almost entirely due to the weighted average cost of capital increasing to 9% from 8.5% previously. Just a quick interlude here. This is a bunch of Wall Street wankery, nothing the to do with Tesla, still impacting Tesla's price target. Makes total sense if you're from Wall Street. We'd buy weakness on a potentially weak 2Q print. What's changed with the model? Units. Morgan Stanley here have cut their 2Q estimates to 270,000 vehicles delivered versus 316,000 previously, taking their 2022 volume forecast to 1.390 million versus 1.425 million previously. Massive underestimates in my opinion, of course. We can't know the future. There could be more futile fascist shutdowns in Shanghai. There could be troubles and delays ramping up production in Austin or Berlin, but I still think this is massively on the downside. But definitely fair to trim Q2 estimates given the insane shutdowns in Shanghai that caused Tesla to lose significant volume. Revenues. Revenues have increased just shy of 1% on higher prices, which more than makes up for the volume shortfall which mostly occurs in 2Q. Margins. Automotive gross margin estimate, excluding zero-emission vehicle credits, falls to 24.6% for 2Q versus 25.8% previously. Full-year gross automotive margins, excluding ZEV credits, falls slightly to 26.5% versus 26.8%. The primary reason for this, of course, is the two enormous factories currently ramping, Austin and Berlin. This will put a temporary drag on margins. Cash flow. Full-year cash flow virtually unchanged at $9.3 billion. Estimates from EV volumes have Tesla delivering 254,200 units in 2Q, but we have allowed for some modicum of upside to this estimate given the historic ability of Tesla to significantly increase production and sales in the latter weeks of a given quarter. Fair. According to data from EV volumes, since 2019 in the third month of a given quarter, Tesla sales have ranged from 47% to 69% of its quarterly sales. This is the whole delivery wave, the majority of the deliveries happening at the tail end of the quarter. If things were completely even, this would be about 33% per month. This continued in 1Q22, where March sales accounted for 58% of sales in the quarter. With Tesla 2Q sales estimated to be around 100,000 units through May from EV volumes, we believe Tesla will flex its manufacturing prowess aided by accelerated ramp of Austin and Berlin and deliver around 170,000 to 175,000 units in June, slightly below the estimated 180,000 units delivered in March 2022. Price target reduced to $1,200 per share from $1,300 per share on weighted average cost of capital increased to 9%, previously 8.5%. That's right, a 0.5% change in the weighted average cost of capital equates for the entirety of the reduction in the Tesla stock price target by $100 per share. Valuation. Our bear case is reduced to $500 per share from $518 previously, while our $1,600 per share bull case for Tesla stock remains unchanged. Interesting. We believe trading floor value for Tesla in second half of this year is near our bear case. For the record, I just do want to point out, Tesla stock's about $700 per share as I record this. Spitting distance from Morgan Stanley's absurd bear case valuation. Yet the gap between 700 and 1200, their newly adjusted base case, remember, the bull case is 1600. We've got a long fucking way to go. So don't say I or Morgan Stanley didn't warn you. Tesla's current share price implies greater than 10 million units by 2030 and greater than 20% EBITDA margin on our model. We note that our $1,200 per share price target for Tesla stock is based on... God damn it. This is hard. I'm thinking like 10 years time how poorly these estimates will have aged and how I can just dig up all these clips and just roast Morgan Stanley repeatedly for me laughing at their absurdly low estimates over and over and over. We note that our $1,200 per share price target is based on 8.5 million units by 2030 versus 8.7 million previously. I seriously don't know what planet these guys are on or what they're smoking, but I'd A, like to visit, and B, please pass the thing that you're smoking, thanks. Which supports just under $600 per share of core automotive value, with the remaining $600 per share driven by recurring revenue and other services from the platform. And now onto some juicy new details about Tesla's massive expansion in China. We're over on the Tasmanian website, quote, Tesla Giga Shanghai plans modernization in July to increase production capacity. Report. Here's the key takeaway. Tesla Giga Shanghai plans to suspend part of its capacity in July to upgrade the factory to increase production capacity to 22,000 vehicles per week. The manufacturer aims to expand as quickly as possible to keep up with the ever-increasing demand. Now, this is completely independent from the gigantic expansion also happening at Shanghai. I believe that will add up to 1 million units of annual capacity, but this is just for the existing facility as far as I'm aware. Obviously, reports from China, it's always hard to know exactly what's going on, but let's annualize this rate. 22,000 vehicles per week times 52 weeks equals a shitload. Equals 1.144 million vehicles. And again, I just want to remind everybody how many vehicles Tesla delivered last year, not just from China. All year, both facilities, both factories, a little less than 1 million vehicles. So it won't be too long before the first stage of the Shanghai plant alone is producing more vehicles per year than Tesla's entire business did globally in 2021. Take a moment to let that sink in. And remember, this isn't even including Austin or Berlin. And this would definitely be a bad time to once again roast Morgan Stanley with their 2030 estimate of 8.5 million units. Okay. Quote, Tesla plans to suspend most production at Giga Shanghai at the beginning of July, Reuters said, citing an internal memo it reviewed. So again, take it with a grain of salt. Reuters are usually pretty good, but not perfect. This will happen in order to modernize the factory, a result of which, massive increase in production capacity. According to the plan, and this is really cool, the factory will ultimately reach record productivity before the end of July. So, can somebody just, is it already late June? In other words, the shutdown, increased efficiencies and ramp back up will take about 1 month flat. That's what I'm reading here. It is reported that after the upgrade, Giga Shanghai will be able to produce 22,000 vehicles per week, several thousand more than before. The upgrade was scheduled for the spring, but due to the pandemic in Shanghai, Tesla's original plan to achieve 8,000 Model 3 and 14,000 Model Y units of production per week at the factory by mid-May could not be completed. Two people familiar with the matter told Reuters. Round of applause to Shanghai. Good job, you fucking idiots. How'd those futile fascist lockdowns go at COVID zero? Since mid-June, Giga Shanghai has been producing 17,000 Model 3 and Model Y vehicles per week. This means after the modernization, the factory will be able to produce 29% more cars than now. This will make a significant contribution to Tesla's overall performance in 2022. A, no shit Sherlock, and B, this is pretty impressive. A few upgrades to existing facilities. This isn't an expansion. This isn't a larger factory footprint. Just upgrading the existing facility, like deleting parts and processes, becoming more efficient and resourceful, causes a 29% increase in output. This is huge. To put this in context, let's just say in a few years' time, Tesla's producing 10 million vehicles per year, and then they can boost the output of all their facilities by 29%. That adds about another 3 million vehicles per year from 10 to 13. This is serious business. And now it's time to talk about Brandon. The UAW's eggplant. No, that's not it either. Corruption within US politics. That is it. Yeah, we're talking about corruption within United States politics, in particular, the Democratic Party, and how said corruption has been completely and utterly derailed. Thank fuck. Over on Bloomberg, quote, Manchin says EV tax credit bonus is gone from spending bill. And when we say bonus, we mean the corrupt, low-key, disguised bailout for government motors and Ford and so on. The proposal would have raised consumer tax credit for electric cars. Negotiations are part of talks to enact the Build Back Better plan. Quote, Senate Democrats have scrapped the extremely corrupt, unfair, low-key returning the bribe. Sorry, I went off script here. Sorry, let's try that again. Senate Democrats have scrapped the extremely corrupt and unfair, that is what it was, bonus tax credit for electric vehicles made with domestic union labor. Love me some union eggplant. That was opposed by Senator Joe Manchin, whose brain actually functions and was willing to call out said corruption despite the endless attacks that he knew would come his way for doing so, as they seek to wrap up negotiations on a spending deal. Quote, "It's gone," Manchin said in an interview at the Capitol Tuesday. The Build Back Better legislation passed last year in the House would have increased the $7,500 consumer tax credit to as much as $1,250 as part of a corrupt White House-backed effort to ensure that electric vehicles are, quote, "manufactured by workers with good jobs." Translation, to repay some of the bribes we've been receiving exclusively from the United Auto Workers Union over the last 30 years. You think I'm joking? Check out the political donations every year to the Democrats and the Republicans from none other than the United Auto Workers Union, whose eggplant Joe Biden seems to enjoy buried in the back of his throat. But the plan came under fire for Manchin, somebody who appears to have at least some semblance of morality and ethics within his being, a West Virginia Democrat and swing vote in the evenly split Senate, as well as from non-unionized EV maker Tesla and foreign-owned automakers such as Toyota and Honda. Just to be clear, for those who don't know, this is basically what was proposed. Yep, everyone gets a tax credit, but if the company producing the electric vehicles just so happens to have workers who are part of the United Auto Workers Union, an extremely corrupt organization, you think I'm kidding? Bro, you want to know how many previous leaders of this company are currently in prison? Seriously, do some homework. The proposal from the corrupt Biden administration, who may have been suffering from brain damage caused by a lack of oxygen, caused by a UAW eggplant in their throat, blocking their airways, so in their defense, maybe it's not their fault, proposed an additional $4,500 tax credit for consumers purchasing vehicles made by the labor of these union employees. Because that totally helps the mission of accelerating America's adoption of electric vehicles, right? That makes sense, that's fair. Rather than incentivizing the purchase of vehicles, let's add an additional, completely unreasonable $4,500 credit for certain companies simply because the UAW has been bribing us for the last 30 years and, it's time to repay those bribes. It's just absolutely absurd. Made no sense. It was extreme corruption, brazen corruption, right out there in the open. I called it out at the time repeatedly. Many others did as well. It's unbelievable that this was even proposed. Honestly. But it was, which really does give you an understanding of who's controlling the Democratic Party of the United States. Those with the largest bags of money. At the time, I said this was total bullshit. Turns out, Manchin was the only Democrat to oppose this, as far as I'm aware. The only. Which again tells you a lot about the integrity of everyone else. Even somebody with an IQ of about 12 could have figured out this was corrupt and unfair and unreasonable, and not at all aligned with the purported purpose of the tax credit. So, let's read on. Quote, "At this point, what we are left with is the basic credit. Conversations about lifting an existing 200,000 vehicle per manufacturer cap on the credit remain ongoing." Why should automakers who have such shit products that they don't sell any be rewarded with an additional incentive while the companies who are actually making and selling compelling electric vehicles, remember, Democrats, the environment, electric vehicles, sustainable energy, what you really want is consumers buying electric vehicles, right? So why would you reward automakers who make piece of shit electric vehicles that no one wants to buy and have a limit, a cap on the number of vehicles these companies can sell before the credit goes away? This doesn't make sense. If, like you say, your goal is to help people buy these electric vehicles, you shouldn't pick winners and play favorites. Credit should apply equally and evenly to everyone buying electric vehicles. Doesn't matter who made them, what kind of labor was involved. Seems reasonable, right? In recent months, Manchin justly criticized the EV tax credit as ludicrous. Totally agree. The credit's size and scope remain a point of debate in negotiations over the spending bill, according to a person familiar with the matter. In recent weeks, Manchin said he doesn't like the existing EV tax credit structure because US companies have run out of credits or will soon run out of credits and foreign companies will continue to get subsidized. Fair point. Quote, "Any foreign vehicle that is an electric vehicle is going to be able to claim a $7,500 credit under existing law," Manchin said. I don't think that's our intent. So I want to take a moment to talk about these EV incentives. First, it's great. Fantastic. This extraordinary, brazen, out in the open, corrupt repayment of bribes from the UAW to the Democrats over the last 30 years is scrapped. No more $4,500 additional tax credit for union-made electric vehicles. Good. But I have two more points. One, We don't need these EV tax credits. We don't. Some people may not understand this yet. EVs don't make up a huge portion of global vehicle volumes, but we've already reached a tipping point. They're unnecessary. These credits are completely unnecessary. EVs have reached price parity, give or take, with ICE vehicles, and the prices are going to continue to plummet over time. Consumers will make the choice. Of course, there are a few brain-dead exceptions that will just be addicted to ICE vehicles until they can no longer buy them because no one's making them anymore. But these EV credits are now completely useless. 10 years ago, 5 years ago, different story, but not today. I think they're a complete and utter waste of money, and I think it's insane, absolutely insane, that these are still being proposed. That being said, from a Tesla stock investor's point of view, bring it on, motherfucker. If consumers who today order a Tesla and already need to wait 6, 9, 12 plus months to take delivery, benefit from an additional $7,500 tax credit, it means the price of purchasing a Tesla in the US is about $7,500 lower. That could be about 10%. The problem is, since Tesla's wait times are already insane, and that's despite them increasing prices across their range of products by 25 to 35% in the last 18 months, Tesla will be forced to raise the price of their vehicles to compensate for the lower purchase price factoring in this EV incentive. And given how insane Tesla's demand and wait times, I think they're going to have to raise prices by almost the exact amount of the EV tax credit, which means Tesla's making an extra $7,500 in pure profit per vehicle sold, and they already have industry-leading profit margins. These EV credits could mean Tesla is banking multiple billions of dollars in additional profits every year. Tesla doesn't need the money. They're already making a shit ton of money, and this is only going to increase, especially as Austin and Berlin ramp. So I want to be really clear. These EV incentives are not only unnecessary, but a complete waste of money. But hey, as a Tesla stock investor, I'll take them. I'm not going to complain. I mean, way to continue to fuck your economy, push inflation higher, spend money you don't need to be spending. But if it means that Tesla's going to be making many billions of additional dollars in annual profits, I'm not going to complain. I am just going to point out how stupid this whole thing is. Let me know in the comments below, what do you guys and girls think? Are these EV credits necessary or unnecessary? Are they a waste of money? Could the money be better spent elsewhere or better not spent at all? Will Tesla be forced to raise the price of their vehicles almost the exact same amount as the EV tax credit? Are you glad to see that the insane, brazen, out in the open corruption of the Biden administration has been derailed? No more $4,500 additional tax credit for union-made electric vehicles. And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment to gain access to loads of exclusive content, including up-to-date access to my Tesla stock price targets out over the next decade, plus dozens of exclusive pieces of content and perks, and well over 100 exclusive Q&A videos dating back more than 2 years. So, I'll see you over there. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.